we're going to begin with just some basic, we're staying on one slide here. We're not moving around. We're just talking first. And then we're going to get into some charts, discuss charts. But there's a lot of theory information we need to discuss that comes way when we talk about a chart. So before we get to charting, let's discuss some of the questions that came to me. So the first thing is NDA reminder on my list, which is we don't want to share this in the chat. We don't want to, talk about these things because we have literal edges. And as a lot of people complain, they'll tell you their edge was damaged. In fact, Yoda was just in chat today saying, what he could do before doesn't work today. And that's because what he may have done was very popular for, several decades, and the market finds a way to, in essence, kill that off. So we want to make sure that we're aware of this problem, and we want to try to be as stealthy and covert about what we do, which is now why, for some of you who now have wondered why my answers in chat are kind of like, oh, that doesn't look good here, or I wouldn't take it, or not exactly an area where I would buy. That's my way of saying, oh, I see something and I don't want it. And so we need to know that in advance, that if I every day call the gapper of the day that ends up being PEN today, P-E-N, then I give away the benefit of and the skill of what we do. And that means there's one more person who figures it out, and that one more person writes a piece of code, and we're competing with one more person in the formula. So in order to avoid that, I am hiding a little. And so knowing this, that's why I've killed off this class after this one, and going to go really more back to basics. And those people who learn future classes will learn really good basic skills. In some ways, that class will be better for them than what you're getting, in the sense of this is a lot to absorb and it's going to take you a lot of time. But I didn't hold back with you guys. I laid it out honestly, what I do, so that you can honestly look at the market and say, I know exactly why he just did what he did. And while a couple of people today suggested that I should have them bring in an AI and artificial intelligence engine to watch me, that would be the most nightmarish experience for our financial existence ever. If you notice, my trades on a consistent basis in the chat is I don't call the same thing every day. It's not the same exact pattern. I mean, basically, at one point I was taking nothing recently but the bottom of bull flags or high tight flags. And that was my entire trading for like 7 trades around one period. I mean, that's all I was searching for, because strong bull market, what could be easier? Find support in a strong trending market in a flag, and I get a free trip to the other side where it gets to resistance. If it breaks out and goes, I got a runner and I'm in incredible shape. If it breaks out and falls back in, I've got a fake up of the downtrend line, and I scale some out and I still leave some to see what happens. In that case, I am pretty much protected. I got a pretty good steel wall in front of me. And so that is the reason I don't even call the same trades every single day of the week, is I can probably sit around and find the same, 4 factors or 3 factors of a trade every day of the week. But as long as it matched the conditions, I should repeat that. You still have to have 4 tools in your bag. But if the conditions are, strong bullish and, the market is trending and the rest, I could just sit and look for a specific condition. I could say, stock that's in an uptrend, clear of all of the moving averages, let's say, is one way of saying it. It pulls back, it finds major support, not one little minor swing, but, hourly it found a nicely rejected area where they treated it like a hot stove. And I told you guys this in the videos, which is they went to touch it and it pulled away like somebody burned themselves. And then it went back down there to test, and it even went down there really fast. It like fell toward it, and then nothing broke and it went dull. And I could say that's on support. It's in an uptrend. It's in a flag pattern. The price action's right. They scared some people. I'm in. That's a trading plan. But if I give too much of the same thing in one way in the chat room, the edge starts to dissipate, and you're competing for fills and all the rest. So I'll be stealthy about some of the ideas here. Now, while my screen is sitting here during the Q&A, I am discussing. There is no moving charts right now, so we're just discussing. So I want to make that clear. First question that everyone has asked, the most common one, is how do I get access to Twitter? And the answer is there is no Twitter. Twitter was destroyed by me a few days back, and we moved to something called Slack, S-L-A-C-K. And while Twitter is free and the rest, Slack is searchable and provides a lot more advantages. We are able to have channels where one is for gappers, or one is for long-term trades, or one is for short-term trades, or one is for Q&A type of things. And we can share images, and it allows us to communicate on setups. And so that isn't available to anyone in this class yet. It is the other people who are taking it are paying just about $100 a month per person who decided to stay and do it. And there's no marketing from me. It's not worth it for me for the $100. The only thing that's worth it is now these guys are starting to show incredible setups. In fact, Chicago in chat this week got me in at the bottom on Momo, M-O-M-O, and nailed it all the way to the top of this week. And it was him who sent me the message on a private message and said, Randy, this is your setup. What do you think? And he was using a 20-cent stop, and I said, no. Look at the area. We need about 80 cents here. Let's just be safe. And we ended up taking the trade together, and it was probably one of my biggest this week. So, other than Baba, but what I can tell you is that feed is currently closed for any new member until you guys understand the videos and get an understanding, until the basic questions are asked. Because if I bring somebody in at your level of experience and throw them into the room asking very basic questions, it would not be fair to the people who already know what the deal is, and we're into the more advanced setups and really finding trading information and getting into more complex questions about how to handle things. So the cost is right now $100 basically. $99 is the same thing, but the end result is you have to be a chart pattern member to use it. So your basic cost is, your chart pattern membership, plus that is an additional fee. Will it stay that price? No, I will probably keep raising it to squeeze most people out that are not really serious about wanting to just push this toward just finding great trades. I mean, let's be honest, we have a chat room. I post trades there. Next thing, which type of charting do I use scaling wise? And the answer is arithmetic, or some people call that, I believe, linear. I do not use charts that squeeze data down to make it presentable in tighter of recent. I need the full view of the chart across all time and price. So I do not use any customized. Oh, I forgot to mention one thing. I apologize. So let's finish this one up. And so I don't use any settings that kind of squeeze a chart down. I want to see it in that one type, and that's how I view all of my charting in all platforms. And I tend to spend the most amount of time in TC2000. You can use whatever platform you want as long as it has simple bars, simple volume. You can get more complex, but it's not necessary. First, you have to be able to spot and identify how charts work. That's more important. On the Twitter thing, I will announce, I forgot to mention one thing, because that was one of the questions is, so if we're not available now, well, the answer is when you're ready, as in this Q&A goes off and some of you tell me you're ready, or I will send out over the next several weeks an email and you decide you can join Slack, and that will give you access to communicate with the group and actually trade these trades, not just, learn theory. And we'll get to that point later on. The next question, does everybody hear me? I just put a Y in your chat box just so I know I'm not talking to myself. Okay, good. Because this would be funny if there was candid camera on here. What allows buying a stock in a rough market or allows me, even on a rougher day in the market, to buy a stock? And the answer is, I'm probably not buying a breakout. And I don't care if some guy in the chat room or some girl in the chat room is touting, oh my God, everybody missed it, it was so gorgeous. If I lived my life emotionally like that, I would kill myself, because there's 1,000 trades a day that are gorgeous. Once you started to learn this class, if you didn't have an ego, and if you didn't pretend like you think you know everything, you probably already started to see that there's a zillion opportunities. They're endless. And the problem becomes not how many opportunities, but how do you limit so many opportunities? You can see so much, so clearly. How do you get yourself to sit your butt down and only pick the best from the stream? Okay, and that's the hard part. But if we're in a rough market, the first thing is you'll see is I'm not taking just any trade. If we're pulling back and I find something on a really strong area and it has beautiful layers, meaning I get, you see in that market it's a little bit off, but you see you're in a really great location, and there's pattern and there's trend and there's maybe a fib and there's a trend line break on volume, and you look at that and you go, there's 6 things here. The risk is 40 cents. Let me see. Am I willing to lose X number of dollars? Am I willing to lose $500 or whatever the number is, $1,000 or $2,000, to find out when it has room all the way to here? To the left, everybody has been decimated. There's no support and resistance. There's no problems in the way. This thing could move 8 times that. I'll take the risk. And that is a matter of function of knowing your confluences or layers on the trade. Now, it's not my primary. If we're in a downtrend, it's the same thing. If the market is going down and suddenly it's finding buyers, I'm not trying to short unless there's something at a critical short area. So, and please hold questions for now. I'm not taking questions in the chat box. We're going to focus on the ones we've already had mailed in. I promise I'll try to get to those later, but I can't read them right now. So what allows me to do that is an understanding that I'm willing to wait for the trade that exists in that time and space. And usually, and I'm going to repeat this because most people are going to ignore this sentence, I try to align every trade with the market and the trade. In a perfect world, I would like the market to be pulling off the pullback low and the stock pulling back off the coming off the pullback low. I am not really trying to buy the pullback low when the market is screaming up, or I'm not trying to, fight what is already going on. I like it when the market is pulling back and it starts to find some stability and that stock is in a perfect location. That to me is alignment. If the market starts going back up and the market is strong and has reversed in the right place that we've learned here with layers, and then a stock goes off with some strength, I can even take that because the two of them are aligned. But if the market is, like today, I watched everybody still going long and I was like, we have bear flags on 2 indexes and they're not going anywhere. But I'm watching people shoot away and I'm thinking to myself, they don't get it. Why not have every factor in your corner before you spend money out there? I don't know many people shooting from the hip that make any money. In fact, the people I know who shoot from the hip and get lucky on trades are the ones that are broke later or complaining later when they lose it all. That's random rewards. Random rewards is the stupidity of humans, unfortunately, where we think that we were the geniuses that put on a trade. And the fact is, a 5-year-old can point in the newspaper and pick better than you. So let's be honest. What really makes the difference is your ability to filter and not be surprised by the fact that some things work that should have never worked. You should be that's why we still have people in chat. I know they're newbies when they say, well, why did Dan not, say good to this one, but this one he called and it kept going? Because Dan's wrong at least 30, 40, 50% of the time. And because that's the opinion looking at price at that exact moment with the eyes of somebody who has his trading method. Somebody else's trading method at that point says, go all long 100% and risk everything you have. Doesn't mean it's right, doesn't mean it's wrong. They both survive if they follow their plan. So, it's important that you try to align things, all of the factors in the same way, at the same time. Next one. With your 5-to-1, do you always look at the first area of resistance no matter the size of the consolidation? And the answer is, you got to go through the class again, but the idea is I'm not down looking for 5-to-1 on a 5-minute chart. I'm not down on a 30-minute chart generally trying to scope out what's to the left. I'm looking at daily. I'm looking at that information to see how much struggle is to the left. I guarantee you don't need to ask me this question if you start doing this. Start drawing horizontal lines at areas you think are in the past are support and resistance. And try your best to not cheat and don't look forward. And see how the market has memory. The fact is, if price to the left has a huge bear flag that was built over 2 weeks or 7 days of price action, and you're running right into the bottom of that prior bear flag, I'm pretty sure a lot of traders initiated around that area. And I'm also pretty sure that when it gets in there, there's going to be sellers and it's going to take new buyers to take over. I'm pretty sure it's going to be choppy and a little bit difficult. Now, of course, if the news story is that you've cured cancer and it's free, then the answer is the stock's going to keep going, and you'll have no control over it, just wiping out anything you call as resistance. But those are conditions that can happen. Anything can happen in the market. If you read the Douglas book that I suggested strongly at doing, anything can happen. The market tomorrow morning, they can reward something they never rewarded before. That's why we have to be flexible and use layers, because you're going to have to adjust as certain layers are not working well at times. And that's actually how I tell the quality of the market. That's one of the things is, just recently since that, I called the exhaustive top right after, the speech. And the first thing I noticed is they were bending support for the first time in, months. 5 months. They were bending support where before it was a hot stove. Now it was lukewarm and they could rest their hand on it. So if the kid's not getting sent back by the touching there, then that support may hold, but it's not as strong as it. There aren't as many buyers sitting there just waiting to scoop up any pullback. So you start to learn to use these tools to read the tape. That's how I read the tape, is reaction. So I determine it by the larger area. Now, if it's one minor day that was up there, that was just, sitting up there and it wasn't a major spike reversal, it's not major resistance. And we can go through some charts maybe and talk about that at some point. But, if people aren't getting it, I can do another, of course, we're going to do another Q&A, but we can do different things on each Q&A. And we can go over, but I'll be honest, if you're too lazy to do this, this is the most important part that needs to be fixed. And that is, take your charts and sit and draw horizontal lines until they speak to you. They should literally speak to you. You'll draw a horizontal line and you'll be like, oh my God, it hit here, and then it hit it from the other side. Are you kidding me? This is incredible. That's what you need to get used to understanding that to the left, support and resistance is one of the most clear signs of an area of trouble that can be to the left of your trade. And everybody says, I know everybody says that new highs, there's nothing, but they forget there's things called TRLs. And I have some proof on that to show. So Next one, how do you screen for 7,000 stocks down to a handful daily? And the answer to this is, number one, I am a student of Dan's. And while he's taught me to pick stocks, I'm not as good as Dan at picking stocks. And the reason why is I haven't taken the time on some of the areas that he taught me to really focus. I don't focus on earnings. I really got so excited by the prospect of reading price and dug so far into that I didn't pick up everything Dan taught me because I had to select what areas I wanted to be a specialist in. When I have the time, I'm going to go back to that. But when Dan says a stock symbol, I put it on my list to watch. And I may watch it for a little bit, or I may watch it for months. But if it's got some activity on there, I'll probably put it in my TC2000. And when I'm doing a review at night, sitting on the couch on my laptop or whatever, I may see it, or on the weekend, I'll see it and I'll draw a trend line and set an alert. And I'll look at it again when the alert comes up. That's my first way to screen. Additionally, there's a number of ways that you can scan for great trades in the market. And while that's not the purpose of today's meeting, I will teach it if you want to learn it. So we can make that a goal of the next meeting. And that's just talking about scanning, finding great setups. But I will mention some things here, which is, some of it is fairly simple when you think about it, which is find less stuff to the left. So that would be stocks closer to the highs, less noise to the left. Maybe it really collapsed hard. You guys look at a chart and you go, oh my God, the last 3 months, it just went straight down. And you think to yourself, that's a horrible stock. And I look left and say, there's not one person that got to position there, support and resistance. It's a wide open hole. If I can get into that area and the price action is good, I can ride all the way through that troubled area with almost no headache if I can just get in there. So, to the left, that's one of the things. You can use moving averages and say to yourself, oh, I'm above the 20-day, I'm above the 50-day, I'm above the 200, the 50's over the 200. Okay, now I got my screen done to begin with. I've got stronger names. Now I'm going to screen and only do the ones over 200,000 shares a day in volume. And then I'm going to screen further and I'm going to say, don't show me anything less than $5. And then I'm going to say, show me all of the stocks that are, let's say, in one group, let's study, because we know that group just recently came out of a big base on the daily and weekly chart. And so you say to yourself, airlines are under demand. I'm going to go and now look at every one of the airlines that meet all of those prior criteria. And you look through and you go, Learjet looks the best of all of them. Let me put that on my list and let's watch it. That's how I scan for a general scan. Now, that's not how I scan for other things that we're going to talk about. But that's just, you can scan. There's a million ways to find candidates. The problem is there's too many. And so the hardest job is you have to create a plan for you. And here's the reason you have to create a plan for you, and I'm proof of it. I work for Dan Zanger. I was trained by Dan Zanger, but I don't trade exactly like Dan Zanger. Now, is that because I'm difficult and don't want to conform, or because I wanted to smack him in the face with some reason that I could be better? Not a chance. My reason is simple. I can't be exactly him, and you can't be exactly me. So I'm not trying to create hundreds of duplicates of myself. I'm saying, here's a set of tools. You slap together the ones that work in your brain, that work and are comfortable for you. For some of you, you're going to say, I love the MACD. And I'm going to say to you, as long as it's not layer number 1 and 2, which is you got to have your trend and you got to have some more concrete tool, then if you want to have it as an added layer that's a confirm tool for entry, wonderful. But if I force upon you and say X has to be done, you will never follow it. And to this day, I've had 100 friends in the trading business that I'm close with, and they all find things that are wonderful. But I can't institute them all into my plan. I have to stay my course. And you can't jump around a chat room following some other person because they say it's a good trade. Because that person may have never made a dime in their account. They may be up on one trade where they called, they were right that time, and then you fall in the trap of thinking that's a skill that you're going to copy. Wrong. You're going to find out how to trade, you're going to learn to fish, and in turn, you're going to fish for yourself. Now, my trade may not make sense to you, but if you study, you'll understand my trade. And if you decide then to take it, the people in my private feed know, they understand me. And in fact, they catch me screwing up live. They see me call a trade and go, I did it a week ago or last week. I called ERJ in chat, and it was a gap trade, and I called it, and like immediately I backed off, and KW, I think in chat, said going long, and I said, no, don't. I didn't realize I missed the TRL. It was sitting right there. It topped out exactly where it was supposed to. It was top of a channel or something. I have the chart. So they fix and catch me. I'm in such a rush doing this on so many charts, and I'm hyperactive, so I miss stuff. I mean, it's just a part of who I am. You know, I couldn't be exactly Dan and sit there for 3 months not pressing a button. I am not built that way. I don't have that level of discipline. Where do I place my stops? That's a loaded question. And the answer is, the more you learn to read price action, the more you know where to place those stops. You don't want to place them directly right under the absolute low by 2 ticks of a swing low. You may want to be sitting there on a mental stop, knowing it may undercut there and play a few games. Or you may not even want to go that far if you notice there's some ledge of defense that was built in front of that. That will only come from learning how to trade from the class. In the meantime, you put yourself under a major swing usually, and that's your defense. This is the reason why Dan says $1 to $2, because he doesn't want to have to get into the discussion of that's not yet what a skill is. That's a starting way to deal with the fact that you're managing risk. After time and you get some experience, you learn at his seminar or what I'm teaching here. If he had a seminar, he doesn't do it right now, but if he had one, you'd learn the same thing, which is, you know, here's all these price action skills, and now you use those to determine how to select a stop. I get stopped on my stops too, so let's not act like just because we know the right area that means that we're not caught. In fact, some of my best trades are the ones where they bust me, and the next day they do something that instantly tells me I got busted, I was screwed, I was one of the lambs to the slaughter, and I immediately jump back in knowing that I knew that I was targeted. So that's very important to understand about stops. So we're going to get into that more. I think we'll do a scanning webinar. If everybody agrees on that, I know we'll probably attack that one. Next one, how to scale in a breakout compared to a pullback, and how I scale out of runners, and how I scale in as well. So in scaling in, you probably should choose your way of doing it. And you probably could read some books like Van Tharp. Dan taught me 50, 30, 20 basically, which is half when you see the setup is starting to break out, 30% more as it's continuing forward, and then even the first minor pullback, 20%. So the idea was to get to 100%, not at the first moment, so that if it comes right back at you, you're not taking a full hit, and you may even give it a little bit more stop distance because you're not freaking out on full size, and then adding to the winner, compounding it up as it's becoming better behaved and proving itself. I do not use that unless I'm on a breakout trade, because on breakout trades, often there is not much to the left. So there is no way to calculate the 5-to-1 easily unless there is a major, resistance point to the left that I can see. And so I often will do very similar to that. I will call it a feeler, but it's less than 50% of the position usually for me. But it's not really suggested. The way Dan does it is a little more aggressive than I do. I tend to limp in a little bit more, 30%, 20% more. And I often am not necessarily adding when it's higher. I can read price, so I'll take the next little pullback or the next little pullback. Or, I don't have to pay up dramatically, or I won't pay up. I'll just sit there waiting for my shot when something's clear. For scaling out, I've said it in chat a lot of times, but I don't know that people understand it. And that is, while I'm flexible about the process, it makes complete legitimate sense how it works. And that is, if the market is strongly trending up and most of my positions aren't giving me a headache, well, then I may be scaling out on the first resistance at 10 to 40, 50% of the trade, because everything is working and my accounts are growing and I have no headaches. And then the market gate may get choppy and I immediately go, oh, got to sell 50, 60, 70%. It's not going anymore. I notice my equity curve flattens out, or I actually notice I had a red week, or the last 2 weeks are sideways and I'm just, or 3 weeks, and I start going, okay, nothing is working toward their targets. I'm having one work that pays for the loser, but the other ones just aren't getting far enough. I'm right on my trades, but they're not making it enough distance to pay the overhead and of the commission and slippage and the loss of the one that didn't go right on full size. And so in that case, I may start going, oh man, it's getting incredibly hard. I'm 80, 90% out on the first target. And what will happen is invariably is how I will get out of that going to 80, 90% is invariably what will happen is one will run and keep running and I will be on a 10% position. And I will feel like a moron, but that 10% position will keep going for 10 more points, like I did on the smaller position on ABGO, where I nailed that thing at 174. And when it was getting up in the 190s on those options, they went from 8 to 21. And I'm like, oh my God, I got to take profit. And then I reduced the size and I took just a portion of the profits. And, if I would have held, it would have been a huge trade, but I kind of backed off. And then it keeps going and you're like, oh, nightmare, I didn't leave enough. That's just one of the problems of this business. If you don't like how I handle it, I didn't write this class to teach you money management. I didn't write this class to teach you really psychology. I wrote it to teach you price action. So go read Van Tharp or somebody like that. But that's how I deal with the problem. Money management, same thing. I mean, I take 1% risk per trade. I may on an account have 5 trades going. So if they all obliterated me, maybe the account would be down 5% all at one time. I try not to pick 2 or 3 in the same sector, because then I know if one of the, something happens in the group, I'm going to get wiped out. When I have 7 and 10 and 15 positions, it's usually across multiple accounts. So I'm not trying to lose, 20% of my net worth in 20 positions. I'm just, it's more common sense for me. If everybody can hear me, still click a Y just so I don't go on to the next thing thinking I am by myself here. Okay, good. Okay, good. Thanks. How to select the best candidates for pullbacks. And I answered that one before, but I want to reply on this one and just simply say, overhead supply we discussed, the room that struggle area provides, many nice layers, many strong layers, a nice average true range for the stock. I mentioned that indicator. It's an indicator that you can put in your watch list. And I think I mentioned in the video, and that's just the average range of the stock over X number of days. The default is 14. So it also helps me to get realistic about not being a moron about a trade. When X is dropping $1 and I look over and it says the average range of this stock is $2 a day, my brain says, come on, dummy. This is normal movement. There's nothing, horrible going on here. So stop being, dramatic. This is a fairly normal move. So I'll look at that and say to myself, wow, this thing moves, $1 a day and it's 40 cents under resistance. I don't care. I'm $1 away from support and, 40 cents from resistance. Hello, this is not making sense. This thing moves that in a day. Wonderful, but it's still right up against resistance. Or I'll look at it and go, oh my God, this is a big mover and it's holding right in the right area. And I've got $4 until it really smacks that area. I can do this in 50 cents for $4. I'll take 8 to 1, whatever it is. So I do that kind of thought in my brain. Certainly above the 200-day is better. I don't love stocks under the 200-day, but if the conditions really warrant it, I'll take it. Above the 50-day usually, one of the things I'll show you is, of course, and I showed you guys live in DOW in chat, and that is an enormous base. I mean, you can buy an enormous base and just sit there on almost anything. It can be a piece of garbage and they still move. On average, they'll move that 20% that O'Neill talked about because of the size of the base. So, I mean, the stock can be a piece of junk, and, you take the trade and, 6 out of 10 will probably be a winner. Are rising channels bearish? And the answer is rising channels are only bearish when they break. They are a self-contained trend. What that means to you is that a rising channel, as long as you're inside the pattern and holding the uptrend line, or if it's reversed in a descending, whatever's happening, as long as it stays in the channel, that behavior is predictable in the sense that you know what its trend is. What rising channels are bad for the market or participants is once they crack the bottom of that area, they may really slice hard if the angle and slope is very strong. Further, when they break, they may often come back up to retest the prior uptrend line as resistance. And the funny thing about that is that's how I nailed the Momo trade idea. And I sent everybody a chart on that. And it's funny that I wasn't planning that as being it was going to gap there. I expected that after it broke, it would come back to that prior rising channel and hit it from below. And I was going to look if there was a potential short there, but it gapped right over. So the theory here about how this works is, you draw your channels. And if you get a rising channel, you don't think bearish until such time as, number one, it's coming out of that channel negatively, or number two, it's really steep and tight and you start to worry that it's what Dan calls a frozen rope, where it's so tight and so, steep that it cracks when the ice breaks. It's broken. I mean, it falls hard. Those usually fall 61.8% of the time. I mean, 61.8% in a retracement, but fibs are an amazing tool, and we can discuss that later. 1 second. Drawing trend lines, closing bar highs or bodies. And the answer is I hate candles for one reason, and that is I know you guys still use them. I see people sending me charts, and I know they're hard to get rid of because they have other advantages. But for me, I need to draw to the extremes, and I need them to be bars most often for most drawing, because you can't squeeze a candle next to the next candle tight enough that you get all of those angles they build in the bars. I can tell you the angles we see that stocks do are not built by humans. The computers they program are, look, and I just had this debate with a friend of mine, and I said, they're going to have artificial intelligence to figure out where support and resistance is, because they can't sit there and read a chart and tell the computer, here's one poke, here's two pokes, here's three pokes, that's resistance. So how do they do it? And a buddy of mine said, dude, they already do. It's called math. They use fibs. They use a calculation system to figure out exactly where to build those supports and resistance. And they have machines to go fill their trades on what funds need it. And then we got into the discussion of trend lines. And the answer is, I've always known that there's no way it's all so clean. Some of these, of course, are humans, but some of them are so clean lately, you wonder, how is it possible? Well, the computer can see geometric. It can do that because that's still math. We as humans aren't as good at that. So you need to draw those lines, understanding that there's a reason why they respond, and to understand that the edge of the bar is important. And also the body of the bar, by being a candle, is separating those two apart. So you don't really see all those little tiny angles. I can tell you there are times where I see two bars next to each other and I can predict out the next, it could be 2 months. It's amazing. You will see two little bars where they're exactly closed, like so perfect. And like a week later, it'll pull back down to that same level. And you drew an uptrend line before anybody on the planet even saw it. But I guarantee you, a computer saw it. Am I going too fast? Please tell me if it's recorded, but I just want to make sure. Am I going too fast? No. Okay. I talk fast. I talk fast, so I apologize. When looking left on the chart for areas of support and resistance, how far back do I look? That's a very good question, and that now comes to a feel. I could probably say to you, if I'm looking at a daily chart, I may be looking at a year back. If I'm looking at an hourly chart, I may be looking at the last month and a half or 2 months. If I'm looking at, a 240-minute chart, I mean, something in between, maybe I'm looking at 5 months. But I'm getting enough data of all the recent participants over the last year. If I'm looking at a weekly chart and there's a major resistance on a weekly chart, I have to tell you that I'll look back 15 years and I don't care, and I'll still use that. I mean, I know people say that they don't, the memory of the market is incredible. It's got a steel box memory. And for some reason, there's some computers or some professionals, and they look at that area and they draw that line just like the theory of where that major area is, and they sell out into that. I can't tell you why, but when they're big levels, as in huge major swings, I'll look at them, on the weekly years and years and years back. If I can, I'll squeeze up my chart and see if there's anything, even if it's 4 years old. I'll look at the monthly and I'll go back if I'm worried. Now, a lot of the charts we trade, that are high beta, a lot of them are, let's just say newer. They're less established. But if I'm looking at a stock like a Microsoft, I'll go back and look at the monthly. Hourly, I'll probably go back. Let me look at my hourly so I can actually tell you. 1 second. I just want to. Let me look at what my screen says currently on this hourly, just so you can tell, because I don't have a rule. I can squeeze it up and down and all of that. So I'm currently looking at all of December, January, February, and March on my hourly chart. I'm looking at, what is that, 4 months? Yeah, that's how far I'm back. I'm looking. When I'm looking at this hourly chart. Now, of course, that's because it's a full-size screen. If I was reduced, I may be looking at less. But remember, the more I can see a lot more data on an hourly chart than I can, let's say, on a daily, because there's a lot of hidden clues that I get off of price action. And the more you learn this and the better you get at price action, the more your brain is just going to go, oh my God. There are times where I have to admit I'm lacking the stones for this business. I wasn't built to be a risk taker. I'm not a gambler. But if I was had a stronger ability to gamble, there are moments when you look at the market and you go, oh my God, I can see 4 steps ahead. And when you do, you really should get on it. I haven't solved that for myself. I'm doing EMDR, trying to work on that part of, taking more risk. And it is incredible, the EMDR technology that the therapist showed me. But, I'm not exactly one wanting to, I have reasons for not wanting to risk more due to a family and the rest. But yeah, you should hammer some of them. They're just incredible. Let's see how far. Okay, managing risk. How do you defend against a position gapping past your stops? You can't. Next. We'll talk about EMDR later, but how do you defend against a position gapping past your stops? You can't, so next. and I'm not joking. There is no, that's when you guys hear me say I got creamed, the few times a year where you'll actually hear me say I got creamed, that was a major gap down. I remember it was HC, whatever it was, HLCP or one of those bios one night, and I got obliterated in one night. I think I had options and stock and was all comfortable in my bed in my footy pajamas, resting underneath, and they planned that they were going to do something overnight, and I woke up the next morning and coffee was all over me. It was HCNP. There you go. Yeah, that one, there it is. I don't even want to remember. I have a mental block on the name. So yeah, you'll have one of those. And for anybody who went into trading to succeed long-term, which I think day traders will be gone over time because the computers are getting brilliant, you'll have to understand that's the risk you take. But there's also statistics that say you'd be crazy not to, because the largest gains in the market are all made overnight. The market is over time, your stocks all tend to gap or move higher, and most of the moves happen in the first few minutes of the day. And so over time, you would miss a huge amount of gains potentially in stocks and winners by trying to stay away from holding overnight. So again, managing risk, that's the one place you can get obliterated. I have no help for that. Next one, first mouse, second mouse. You've all heard me say it in chat, but somebody wanted to understand what it is. First mouse means that while everybody in the chat room is excited and freaking out or crying because the market's going straight down, and the minute there's a V reversal, minute there's one bar up, you see somebody in this chat room invariably run and go, oh, it's bottom. I'm starting here. We may have the low. And I'm looking at them like, are you kidding me? Is that a trading plan? How do you plan on figuring out? There were 780,000 lows in 2008 when I went broke. That was one of my problems. I was an idiot. Every low I tried was another low. So how do you stop that? Well, you create layers, and you say to yourself, the conditions of what I enter on is not a V bottom. I enter on a double bottom, or I enter after the V, it breaks a trend line, and then it does a flag or some pattern. I'll take that. I need to be the second mouse, not the first mouse that gets crushed by the steel, slapper, the thing comes over and smacks them and holds them and kills them. But I need to go and let that guy be caught by the thing so I can grab the cheese that's on top. So in other words, let the first guy run out and, and test the waters, let him get smacked by the bar, and you wait it out and find until your conditions, are set, and then you step out to grab that cheese, in essence. And yeah, CJ just wrote, I see third and fourth mouse conditions that work even better. And the answer is yes. And for an impulsive ADH person like myself, I had to accept that I'm going to live with second mouse because, I'm more impulsive. So for some of you, if you want to beat my accuracy, you'll be better in certain areas than I am at certain, problems that I have internally. You'll wait around for third mouse and let, the chances come, you may not get the better fill, but you'll stop trying to buy a bottom and you'll wait till you're the third guy in line. And the only problem with being third and fourth is, just remember, the more times you skip the best quality signal, number two, the closer you are to the 5-to-1 R on the other side. And most traders complain that in the market, you can't even get 3-to-1. And I prove on a daily basis, or I should say on a weekly basis, that I nail 5-to-1. But one of the ways I do that is with an incredibly refined entry process. So I would say to you, it's very important that you try to be, so an example of first mouse and second mouse would be, if the market comes to a top while all these guys are trying to kill it and short, I'll wait until it builds the first bull flag, and then it tries to rip up and gets to the highs, and then it can't break out, and then it turns down, and I'll think, maybe now I'll give it a shot because the first people and the dreamers have all been taken out, and I'll give it a shot now. I want somebody wiped out before me, So that's the idea on that, and we can get more into that if people don't understand. How do I get my alerts for my setups? Well, I use TC2000 for one reason. I don't love the platform, to be honest with you, although it's the fastest for scanning and looking up charts. I think TradeStation and multi-charts, tightness of bars, the resolution is tighter, and my eyes find it easier to spot. In other words, I don't even need to draw a trend line in TradeStation, and I generally can see them because it's so clear on my eyes. Now, your eyes may be different, but that's my eyes. I find that TC2000 is a little fuzzy, but what I can tell you is they have the best alert system in the world. You may have this also in eSignal. You'll have this in Thinkorswim, but I can set a trend line alert, and it could be a trend line going out 5 years. And if that thing is hit, I can have a rule on it that says text me. And if it triggers, wait 1 day to trigger again if it happens, or stop triggering ever again, or trigger 1 hour later. And so I'm not going to miss certain key signals. Now, of course, on a day where the entire market breaks out, that all fails because I get 642 messages and I can't figure out where to go. So that is the problem of an alert day where the whole world figures out that things are breaking out. I admit that day I'm throwing my hands up and I'm going, oh, what can I find? Because I've got so many things going on. What's the first thing that comes to my eyes? So I'm sorry, I'm not answering questions right now, but we can try maybe later. The next one, difference between a topping resistance line and the upper line of a channel. They serve the same purpose. A TRL and an upper channel line is very common in the market, and they are incredibly powerful topping signals and the rest. You know, these are important signals to see. And I guarantee you most of the people in class do not see it, because I still see people skipping completely perfect information or asking me about a trade right up against an area where they would know exactly what I am, worried about in that spot if they were studying. So I know it takes time, and I'm not blaming you because it takes time, but it's important. Next one, megaphone. If it's bearish, why did you call the low on Brexit with it? And the answer on that is very simple. It is a bearish pattern, but on the bottom edge, it is a BSL. It's a bottoming support line. So if I found other layers in that area at the same time, and the bottoming support line was used to reject price, like it was wedging down, like a wedge wedges down, and the bottom line price is defended, I will use layers and try to, see if there's a trade. In that case, the layers came up and I had a trade. Sometimes there aren't any other layers, or I can't find other conditions and I can't take the trade. But that's exactly how I caught ACIA that last time before earnings. And my final runner was a loser on the last 10%, but I nailed it on the way up. It was a BSL all on the way down, and it finally reacted properly, and I waited and I nailed it after it responded to that. So we're going to show more on that in charts. We're about to get the charts in about, I hope really quickly, I'll move through these. I don't know the names of the best books for money management ideas, but I'm not the one to ask for this, and I'm not a big risk taker. If you're built for a lot of risk, I say, all for it, but I wanted to be here all the time, and I have way too many responsibilities to be a big risk taker. I'm happy to take money out of the market, but I'm not really built to just keep it there and keep increasing my risk. I'd rather take out 6 figures than risking 7 figures. It's just the way I am. I'm built a certain way, and I understand who I am. Let's see. Can you set market orders while you're at work? The answer is no. You're probably best not to do that. You probably are best setting an alert on your phone using Thinkorswim, and when the alert goes off, going to your phone and looking at what the volume looks like, or using TeamViewer and logging into your desktop and looking at the information and seeing if it's high volume, and then firing. If you can't be available at all, you're going to have to widen your stops dramatically, like O'Neill suggested in his book, How to Make Money in Stocks. You'll probably have to use 5 and 7% stops, because you're gonna have a hard time nailing any kind of accuracy without it. Now, if the market is perfect and breakouts are working, and Dan's newsletter is filled with successful ones, and you want to set a trend line and just say buy, you'll probably have good odds because the market is carrying your trades forward. But that would need to be really good conditions. And would you believe the new version of TC2000? I opened just a little tiny account with them to test out their features. You can actually put a trend line down, set it, and it'll literally buy the stock at that trend line automatically. It'll do some crazy. You can draw the uptrend line and it'll stop you out at the uptrend line. Pretty cool. What am I watching all day? Okay, well, the answer is I'm watching futures, the screen I showed in the class, number 5, video 5, I showed what I look at. And I look at stocks that catch my eye based on the things that I'm going to show you when it comes to scanning for gappers or Dan stocks. And mostly they come up to me because of high volume or overnight when I reviewed and found great price action. And if you watch the class, you'll start to notice that my trades are fairly similar, when we're in an uptrend, bottom of bull flags, major support pullbacks, a breakout in an incredibly nice base. Why the base? Because I like the security of knowing that there's people underneath me defending. A super strong trend line break or something you may find me on, but they have to have other layers. So we can get, that one's a little bit more complex. Do I trade options? I'm not an expert of options. Take no advice from me. I take advice from others that give me advice on it. If I do options, which I often do, I go deep in the money enough to synthetically create the stock at a lower cost. So like for instance on Win, I think I bought calls and they were like $11 a piece. So I'm like in far enough that I was paying like $1 premium for Win out like 3 months. I forget what it was, but I went out months and I went deep enough where I was literally paying very small premium. And in doing so, when the stock is up today, for everybody a couple of dollars, I'm up, 20% because I'm getting, 80% of the move or 90% of the move, and I have very little premium. So I sucked that out by paying up for an expensive in the money strike. I'm not an expert, so let's move on, but that's what I do. And that's what Dan does. Why drop to a lower time frame on entry? Why? Well, that's a very good question, but there's a very good answer. And that is, we determine what we have for layers in an area, maybe on the weekly or daily, but we would like to refine that entry. And we don't want to enter off of a weekly that's a $7 bar. So we need to go down to the hourly to align and find a condition that we will confirm and get us in for a smaller amount of stop distance. And so you should be looking at a higher time frame, finding your trade, and then when you go down to that hourly or that 30-minute, you're saying to yourself, wow, there's this little bull flag, and it's right at the bottom next to the double bottom. It's right next to that huge 2B, and it's right at the uptrend line of that big, trend line, and it's this and it's that. Okay, I'm going to use the little bull flag to enter and give, my first low risk, small stop entry. So that's why I do that. Next one, how do I use TRL? We're going to look at that. How do I use TRLs and VSLs? And what happens if they break? Well, we're going to look at examples of that. Next one, right shoulder failures. Do I use them? Yes. The Apple trade from 112.50 was exactly that. And I'm going to show you a chart on that. What is a virgin mid? Now, this one we're going to talk about. You'll also have to, we'll look in some charts, but understand a virgin mid actually is something that I now understand why it exists, because somebody that knows market profile explained it to me. Where price turns, where you see that rounding or that bottoming, and price turns from going down to up, not the trend line, but the actual bar that's the center bar in between the 3 bars that turn. Basically, most reversals are a 3-bar reversal, where there's bar going down, next bar is a little bit lower, that bar is the center bar, and the next bar takes out that bar, to go up. And so you're left with this 3-bar pattern or whatever, that's the low. Well, inside that 3-bar pattern, to make that turn, it took a bunch of traders to maneuver and make that change. And so being that there's so many traders that are putting their weight into that area, they leave a level of market profile, which means they leave an area of high trading volume. And so when price comes back to those high trading volume areas, it will often respond. I thought I had just found something in the market that nobody realized. What I found is if you understand market profile, you understand that that was a high volume, high traffic area. And because of it, that area ends up being of more value than most when it comes to support and resistance that you can't see. There's other hidden support and resistance, but this is one that is truly identifiable based on something that was confirmed by me. One of the class members said to me, you're not crazy, your virgin mid thing that you made up, it actually exists if you understand how price is making itself available on market profile, where there's a certain volume in each price. That's an area of high volume. I said, okay, so that makes some sense. In the meantime, I just use what it is. I don't try to, I'm not the scientist. I just, draw the lines and do what I'm supposed to do. Next, when you identify an M bottom, how important is the volume of the breakout? And the answer is, that is not what I am worried about on an M bottom. What I am worried about an M bottom is the right one. They're rare and they need to be screened for with your eyes. They're not something you're going to look up with a computer tool. You're not going to find some wonderful way to find them. You're going to look at decimated charts and all of a sudden they're going to stand out to you immediately if there's any being built. Right now, one is being built in Twillo, TWLO. Potentially right now on Twillo, there is a M bottom that's trying to form. And I hope the stock gets beat up a little bit more here. I don't want good news right now. I want the second side of the M bottom to decimate more traders so that they have no hope. And so the people on top of the M, which is a double top at the bottom of a very bad chart, in essence, the stops are very comfortable and the new longs get wiped out so that we really clean house and everybody is chasing when we break those peaks. So remember, an M bottom is a very psychological pattern and it's one of the most powerful patterns I know of in the market that people just don't get. But you close your mouth and you don't talk about that one because if you know how to spot them and you start to read them properly, they're incredible. I mean, I came back from a lot of net worth damage using that pattern out of 2009 and 10 and 11. There was a lot of stocks that did that. Next one, how do you find screw bars? And the answer is in my private feed every morning, we work on it together. We scan all of the stocks that are gapping and we scan and have our trend line alerts set. And so we're looking for those key gaps and behaviors that they're opening the right place. And so the first thing I'm doing out of the open is I'm looking at my quote screen of all the ones I selected from that morning. And I'm looking which ones have volume and which ones opened right. And what I mean by opening right is when it's a screw bar, I don't want it gapping much further than just over the last bar. It has to be, or just under the last bar. It has to be very close, like I said in the video. Has to be tight. Has to be the kind of thing where it closes at the, the low and then gaps over the high just by a few ticks. And those can be very powerful. And in fact, you could make a living day trading that if you understand how many people are trapped. But again, that would take more skills than just the one tool. So I'm going to show you some examples and we're going to learn how screw bars and gap flips and the flipping process really works. So we're going to go to images in a second. Let me just see. Did I get all there? Did I get all there? Gap flips, yes. Okay, it's time to go into charts. I believe I'm just checking. Okay, let's get into charts now. I'm going to try to switch my screen to get to the right window here. So let me just see. Okay, let me see. Okay, do you guys see a screenshot of Baidu here right now? I just want to make sure people can see this. Okay, so then, and hopefully, is it clear? Can you see it clearly? Okay, everybody can see it clearly. Okay, so let's look at some things that we want to learn and understand about just flipping. So, and I'm going to flip through some charts. We're going to do these one at a time. And this is not how I wanted to present it, but I guess Google ate my Google slides, totally gone. So this was actually in order. We were going to do them in order, but of course, for this wonderful video, we're going to do them in the order that they are in a file structure because they're lost in Google Slides. So Baidu, very simple here. This is not an M bottom. That's not the purpose of me showing it. It kind of has an M bottom look right here and here where my mouse shows, but that's not the purpose of why I really did it. This could be an M bottom, but the problem with this one is it spikes, not nice swings. I do prefer swings because more people build up at that level. What I do want you to notice is the support here, resistance here, support here. The market has a memory, so don't think this is random. Just now on Baidu, it came down, and what did it do? It stopped exactly at the same area that it's done 5 times. That's sometimes why I say the simplest stuff, this is not a hard job, unless you have what I have. Is like the psychological part's the hard part. I'm not going to say it's not a hard job. There's a lot of hard parts about it. The hardest part is our mind. But this is so easy to see. You can see that this is not something I'm inventing. They have a love for this area. And so when it gets back down there, you have a trade. You go down to your shorter time frame, you find 3 layers, and you go, I'm going to give it a shot. And today, I don't know where Baidu finished up. I took this shot, I think, this morning. But I don't know where this ended up. But Baidu, you know, had a good move. And yes, it could be the it's not the neckline of a Head and Shoulders unless it builds out the right shoulder. It's actually right now could be an inverse Head and Shoulder, with this being the left shoulder, this being the head, and this being the right shoulder in a complex double bottom right shoulder. So it could be going up to a right shoulder up here, if that makes sense. I don't see the left here to see if this could be a right shoulder of a bigger pattern, so I can't see it right now. But that's one thing to look at. And no, Baidu did not have a screw bar yesterday. So we'll get into that, unless I'm not, at least in my view right now, looking at it here. Let me look at my other system just real quick so I can answer that and we can move on. No, that was not a screw bar. But we'll get into why it was, but it was a gap flip, and we'll get into that in a minute. So next one. Why isn't it not working? 1 second. You have to pause here if something's not working right. Bear with me 1 sec. This is not working right. I'm going to have to just switch and share a window. No, let's see. Okay, 1 second. I'm trying to reshare the right information and it's not letting me. Okay, let's see here. It failed. Okay. If you're all here, just hit Y, letting me know that I'm not the only one talking to myself still here. And we're going to try this again, and I may have to do it on my big screen. I was worried about this being a resolution problem, but let's see what happens. Okay, hold on. This is... Okay, what do you see? What do you see on screen? If you guys can tell me, is it a chart, the same Baidu chart? Okay, is it still clear? Is it still clear? Okay, the reason why I asked is because this thing is high resolution, the screen I'm on. This thing's like 4K or something. I was wondering if you guys would have a downgrading issue. Okay, so we're going to go to the next one. We talked about Baidu. And the next one is GS. So I want to talk to you about TRLs and BSLs and the incredible value that you may have even not figured out yet. But this is such a simple tool, and you'll fight this until you figure out that they're this powerful. But, you know, literally, you'll draw the topping lines, and it'll spend 2 days up there and fight it. And then you actually can notice this little bar right here. And I don't know that you start to notice these little things. That's why candles make this hard. Is this little bar came back after falling underneath it. It came back to tap it one time and give you a free clue that you weren't going any further. And it closed on the low. So I knew, I mean, I can read this stuff. I mean, that's how I read this stuff, is they tell me clues by behavior. That's a perfect example of a clue. Break above, come back under, come back to test it. And that trend line trick has told me they're not going above that right now. They pretty much have confirmed it and flipped it back. Or in this case, they never flipped it at all. Same thing with the BSL. I may have even called this trade live. I think I called it in the first time. It didn't work, and the second time it did. Same process over and over again. Bottoming support line, find your reason. This is actually a 2B bottoming support line here. Find your other reasons. You're in at 230, 225 something, whatever that is. And you got to ride all the way up to here. Your 5-to-1 in this case was all the way up to here. So the math would have said, you're entering in down here, 525, let's call it, and you're up here at 535, 540. If you were able to enter in with a $2 stop even, 2 times 5 is 10. As long as it was over a $10 target, you could be wrong 75% of the time and still make money in that case, because the room to the resistance is large enough compared to the stop distance that even if you're wrong consistently, the one that wins is enough to pay back the losers. Now, you don't want to be wrong 70% of the time. I've had periods like that in my earlier years. You want to stay, well, if you're not hyperactive and controlling yourself and not doing it in your junk account, like I sometimes do, if you're really, doing it on serious money on my larger accounts, you want to maintain, I can maintain 60s and 70s, no problem. When I go to 90, I recently told you it was a market. It wasn't me. Something was very wrong. My streaks were too large. When I go below, 50 or 60, I start to know that it's also a streak in the other direction. So, you start to learn these things. But even if you're wrong, 60% of the time, and the one time you win, you're 7 and 5 and 10 times what you risked, you're going to lose $1, then lose another $1, then lose another $1, then hit 12 or 7. Then the next one, you're going to lose $1, you're going to gain 10. You're going to lose $1, gain 5, whatever it is. Lose $2 and gain 11. You're going to start to see that the one win pays for 2, 3 losses, 4 losses so quickly. That is why math matters. Now, also here you realize this TRL was exceeded, and I said it in the video, and I believe I said in the video, when you break a TRL, in this case they gapped over it. When you break a TRL, and especially when you cap over like this, they are often parabolic moves. So you can't be surprised. Some of them will fail, but they can start a parabolic move. And this one started a rip-roaring parabolic move on the TRL gap over. And so this is the price action you're learning. IDX, this is how, actually Rasmussen gave this to you all in chat. He took the class and he actually called this. And I don't know, the people in class even that had taken the class prior had realized it, but the gap that he had, the alert, was exactly a gap like to the tick of the TRL. That is an instant long. I have to admit, when I see that, I try to go to every machine as fast as I can and hit market. I never fill it properly. I usually, it's a messy moment for me, but I have to get in when I see that kind of stuff. A perfect gap is, I'm sorry, the gaps aren't by accident. Some of these levels are done completely on purpose by computers or by humans sitting in Wall Street, and they do this stuff. And when I see it, I go after those things. That doesn't mean it's in your trading plan. I want to remind you, if you're really struggling, if you're really finding it a hard time to learn this business, if you really have gone through decades or years of struggling and you just can't get enough consistency, or you make all your money and you lose it, the answer is not doing everything I show here today. In fact, avoiding this would be a good idea. This is for the guy or girl that's active and consistent and then wants to add something to their repertoire. And the end of this call, I should be reminded basically, is talk about how to get a good trading plan. Because if somebody will type that at the end, how to get a good trading plan, I can get longer into this discussion of, you need to just pick 3-4 tools and literally ignore everyone outside of that. You watch chat for the emotion. You watch chat for a name that gets listed, not because it went up $6 today, but because you're watching because you got time on your hands to go and research. In the meantime, you could be sitting there the entire day just waiting for one double bottom on one stock that you planned and doing nothing else. And you will outperform all the little chickens with their heads cut off running around all day long. Nobody in that room can guarantee you they're making money. So because of that, you just shouldn't be following anyone. And you shouldn't say, oh, because that person had 3 good calls, I'm going to follow it. I've seen that a million times. I mean, people revere certain people in there. I don't get it. It's hysterical to me. You are here to learn how to set a trading plan from this information and price action reading. You create your own plan and you follow it. And like Super Trader Chris did when we were on our interview, when we were laughing, he said, you know, for me, I get Dan's newsletter and don't need the noise of chat because I've already figured out my system. In the earlier stages, I was in the chat room and I was learning and I was picking up data and I still felt like there was valuable information. But at this stage in my existence, I'm sitting here getting his newsletter and I don't need any noise like that. In fact, I'll take my trade, set my stops, and I'll wait for the next big one. And that was something he learned about himself. But it took him, I forget how many years, he said, a ton of years just to get to the point of where he felt like enough he had learned being around the business, being around other strong traders before he could get to that point. So that's important to learn. Here's an example of what's called a gap flip. And this is what I'm talking about when it's not a screw bar. This wasn't a screw bar. The prior day was a strong bar, but the thing gapped a major pivot. So when I'm sitting there in the pre-market looking to see what's gapping, and I literally will look and see, anything gapping with 5,000 shares, that's gapping up, I'll look and see where those gaps are, and I'll sit there for the first 45 minutes while I'm writing the morning report and talking to Dan back and forth that there's a name he wants to put on or if there's a name I want to put on. And I go back and forth maybe, a couple times with him, but I'll be scanning all these gaps. And while he doesn't do this, it's not his style, I'll scan them and then I'll see, there's something strategically gapping. And literally on that open, it'll be on my top list. And as soon as the market opens, I'll be sitting there trying to get in that thing. One of my friends, CKIP from chat, you've seen his name, CKIP, is a friend of mine. And he even made a suggestion. He says, I know you don't like 5-minute charts, Randy, because you're impulsive and you have your discipline issue on that. But I will tell you that I want you to try something. I want you to try to put the 5-minute aside and hide it. And the moment you get one of your gap flips or screw bars, I want you to go and open that 5-minute and only trigger on an opening range breakout from there and put your stop underneath that. And then try to see if that helps on the entry side. And I originally balked and he said, just do it. Well, I did it on one trade and I just nailed it, absolutely nailed it for the entire day. And I realized, even though I hate that time frame because it can get me in huge trouble and I have to hide it immediately, it did help to confirm and help me with the entry rather than just hitting market completely and running in like a crazy frenzied nightmare. So when you get these situations and search for your gap flips, you can do it over, in the morning. That may be a good behavior for you is to go down. And that's the one time I say, go down to that 5-minute. I know that time frame won't matter in the scheme of price action, but it will matter on helping you getting in to a major gap flip or a screw bar. Next one, here's an example of an actual screw bar. A screw bar is the same thing as a gap flip, but the bar previous was horrible. Look at this thing. This gap down on earnings closed at the last quarter of the bar low. And then the next day I was sitting there, and I couldn't call this in chat, guys. I'm sorry. I can't call these all in chat. I do this on a private feed for a reason because everyone will figure out everything I do. I'm not trying to hand that out to everyone. Sorry, but I can't call everything. And actually my job is just to watch the chat, and it became much more. So realistically, when, this is a screw bar, all that it takes to get a screw bar is a very clean bar in one direction, completely reversed by the next bar. And so if this bar closed as a doji, I wouldn't be saying it's a screw bar. I would call that a gap flip. And they are different. A gap flip may be nice, but a screw bar can be absolutely incredible in the sense that they can run it all day long. Meaning when you get some of those, you can just sit and add, and it'll keep going the entire day in one direction. The next day it may suck, but that day everybody is completely trapped and they will try to get out for the whole day. It often happens, okay? And all you need to know is a screw bar is the exact opposite of the prior day it gaps over that direction. So if this was a straight up bar, and the next day it completely gaps under that beautiful bull bar, everybody on that whole day is trapped, and shorts are very happy and longs are decimated, and it's going to keep, there's going to be selling all day long. And that's what happens. X, US Steel. Here's an example of a gap flip, and one of the reasons I'm in, I took a little more X than the rest was, you know, it gapped the next day. It was closed right at the high, and the next day it gapped right on top of it, like pennies. And I went, okay, continuation, right in the direction. I mean, now if it gapped up here at 36.50, I wouldn't have taken that. Look at this. It gapped within pennies. It has to be so close, these gaps. It needs to be an actual support and resistance flip. It can't be a distance away. The ones that are a distance away are probably 30% accurate. The ones that gap perfectly close are probably 60% accurate. I mean, it's really a complete, you know, flip in theory when you get these, but they're very powerful movers. Now this one, you haven't noticed it. You'll notice later there was something else there. We'll get into that later. Why doesn't it let me? Hold on one second. Next one, Snap. I didn't buy Snap on the opening day, and I didn't even buy it on this signal, but it was one that I got, and that was, I noticed it like a little late, but it gapped the prior day's low. Look at this thing, it closed low. That is still a doji-like bar, so it wasn't really a screw bar, so I didn't think it would go the whole day, but it gapped over. So that's why I came into chat and said, guys, I think Snap is actually, you know, bullish today. And the thing ran up strong for the whole day, and I mean for the beginning of the day, and it just like got collapsed afterwards. So you know, it had a reason why a day trade at least was going to be good. And a lot of screw bars and gap flips are only good for the day if they're not in really good position on the structure of the daily and weekly. So if you get one of these gaps that is a gap flip on the right area of the chart with other layers in that zone, like where X was, it was in a very good spot, you know, you think swing. But when you're in an area like, you know, let's say you're doing it on a stock that's been, you know, in not such great shape, you know, maybe you realize it's not my best move. And so you go for a day trade in it. I can't give you everything as an exact because nothing is exact in the market on a consistent basis. Everything fails, which is why we use layers. I actually saw some people crazy enough to say that Snap actually looked good today, which is just miraculous to me. And I've actually heard people saying this stock could be coming back. And for those 3 days, I actually watched in horror as all it was doing was filling the gap. And it went underneath the gap and basically tested right here into the gap and then fell over. If you are reading the class and understanding price action, you can see all of this soon. And you'll understand what's happening. You had no interest in this area rounding out to go lower on Snap. There was absolutely zero desire, need to even look for a long on this trade. So it's just important that I get you to, you know, to understand what that, you know, what to look for and what not to. This is poor behavior to say the least. Next one, this is a TRL. And mind you, this would normally be in order, but it's not because I had a blowout of Google Slides. So resistance line, this is your TRL. You have 2 points and you equal your third. Your TRL hit here. You can see it went above it on CLF. That was the moment I knew my trade wasn't going to work. I bought it and live called that I was buying it at 1090 on this stock. And it got up to the TRL and I sold some, and then it came back down and I was still calm about the trade. And then it came up here and tapped the underside of TRL, and I know, oh man, I'm dead. So I start scaling out slowly, thinking maybe it's not yet a problem. It'll hold the bull flag here. And it didn't, and I sold my shares. It was coming back out. And everybody wonders, you know, how you avoid getting caught in some sales. It's because you do your homework and have your lines drawn. You can't do this all while the market is moving. You'll be under too much stress, too much anxiety, you know, trying to make things work in real time. If you do the homework and draw up your chart on TC2000 at night or whatever your platform is, And believe me, toys will not make you money. It's all about you first. But if you do that, you you will have a better chance of dealing with it. In fact, those of you who freak out when you have 6 positions going and the morning opens and everything's coming at you and you're falling apart, the fact is that's kind of your fault. If you do your homework before and you're all ready, then you have your lines drawn and you have your alert set. And if something's going wrong, you're getting an alert that, guess what? Time, buddy, to sell that thing off, or it's time to look at whether I'm about to get stopped. Do your homework. Do your homework in advance. And you'll be ready. So, while everybody complained about this trade, this was a good trade for me. CLF was great. Here's what just happened, not today, but yesterday, I guess, in VEEV. And this is one I didn't catch because I was so busy and the market was kind of not conducive. But VEEV literally closes the high a day, next day opens and like a gap open just slightly right over the top, and the open was like right on top. And I'm like, okay, I think I figured it out like 20 cents or 15 cents later, but I was just too busy with other stuff. So I'm missing 100 trades a day. I know that, or 1,000 trades a day, or whatever it is. But that tells you it was going to be a pretty good day for VEEV. That was a pretty darn good clue that VEEV was in great shape. X, how did I partly also catch things like X? Well, here's your larger time frame chart, and you look at it and you see there's a BSL down at the bottom. So while this pullback right now, you may say to yourself, why is this happening? Well, there's a BSL down there. There's reasons to be looking for a trade. And so if you notice my first call on X, all that was the bottom of a bull flag. I told you that was one of my favorite patterns in a strong move, is I just do simple stuff, bottom of a bull flag. The reason I went nuts over, X was I knew that it was supposed to be down here around $30 or whatever. It was supposed to be, $31. It was, bottoming out, but they gapped it up the next day and I couldn't get it. I forget which day it was, but there was like a gap in here and I just couldn't catch it. And so I missed it and then told you guys I'm buying it like 34 or whatever it was. And I bought here and I scaled out into this top. I don't know that I used a TRL in that case. In fact, I'm pretty sure I didn't. But I scaled out and then it reversed here and I sold more down. And then now I'm, added some back and this, helps me, the bottoming support line. But it's never alone. A bottoming support line alone is not a trade. It's layers together. Here's something that happened just, I want to say, was this, what day was this? Was this yesterday? Momo? Was this yesterday? I think it may have been yesterday. Anyways, I noticed people all like in the room. You can watch them. That's why you should be watching the room for emotion. You'll see Chicken Little going, oh, Momo just broke the uptrend line. It's going down. It's going down. And they're flipping out. And I'm sitting there watching and it's underneath. And, I'm watching the bar and I'm watching the bar. And next thing you know, I started to see it revisit coming back up. And the thing I'm thinking about at that moment is it coming up fast or is it coming up slow? If it's coming up slow, then nobody got trapped. Nobody got screwed out of their shares. If it's coming up fast, then I'm thinking to myself, somebody got screwed royal. And I start looking for an excuse to want to maybe add to my position or buy a little bit more or take it. And I actually, actually, I can't say that, honestly. I don't remember. Did I buy? I think I added on some other little pattern inside of that, inside of this. But yeah, you get a further gain on this thing. I wasn't selling in that spot. It's called a fake down. But I was actually either adding to that position. I now can't even remember. I've been so busy lately. But that's not a spot that scares you. That's a taking out of people in the process. And some of them will be much larger than that. But I want you to understand that this game is not about helping you to get to success. It's about taking your money, just as Dan taught me. So, see that and understand those shakeouts are done on purpose. Here is what an M bottom may look like soon. And this is Twillo, and there's 2 bottoms here. 1, 2, I'm in 2 tops right now. Spike, so I wouldn't have loved this. This one is more of a swing. It kind of spent like 4 days up here. And I really want this to pull back. And the reason I want this to pull back is I want every buyer in here from 27 or whatever to 34 to be hurt. I'm sorry to say it, if we're trading, we have to talk about what has to happen. And that is, the more people that get damaged here, the more people that will be left out on what will be a stronger move. And octane will come from them all being obliterated. It comes down here a little bit more. I'd love like 27, maybe 28 if we can get it. And then everybody's, in fact, our chat room, hopefully they're saying, oh, Twilio sucks. This is the worst piece of crap ever. Good. Keep saying that. And basically what will happen is we will finally take out the two peaks. It is a double top failure in essence. But let's talk about the conditions of what makes it a good one. All double top failures are not good. A double top failure in a massive downtrend where everybody to the left has been wiped out and there's very little resistance. Look at this thing. I mean, if you get past this peak at 40, it's like a wide open space to 70. I mean, there's like nobody who survived this thing. It was just a piece of garbage. So there's very little support and resistance is easy. It is exactly the pattern of looking at an M. 1, 2, 3, 4. I mean, it's just an M. But the idea is it's a double top failure in a very deep trench with nice swing rejections. And the second rejection is also best to be a nice rejection. And the reason why is we want breakout traders to be stacked up here. We want shorts to be putting their stops up here. We want professionals to stop looking at it until it gets up here, because once that all gets taken out, it is an order flow cascade. And what I mean by that is the longs that now screwed up down here are now screaming it broke out of a base, even though that's not a definition of a base. They will think it's a base. Next thing, the people who are short up here that are weak hands, they're getting rolled over on day one. They're getting ripped, their hearts are being ripped out right in here. The next thing that kicks in is professionals. They don't react right here under $37, $38. They start to get to 38, 39, 40, and they start going, wait a minute. This thing is bottoming out. We have shorts. We're getting the heck out of Dodge. So the stock starts out to rip forward, then usually will pull back or rest, and then it flies and becomes an entire bottom for potentially years. This could be the start of one. This was one in rice, and this one was a good one. This stock moved up. I didn't cut the information of how big this was. This is like 170%, but you get a top and you get another top, and the second rejection was so beautiful. It was all the way down to nearly the low, and the fall before it was like a wedging down, and then it fell straight down. I mean, really deep in the trench, and boom, you took out the highs, and look how it came back to it. Look how it came back to it. It tested it as support. Do you see this? Does everybody see this? Does everybody see RICE, R-I-C-E? If you're having a problem on your side, you got to re-log in. Okay, so what I want you to see on RICE, and this is recorded, is that it was two peaks, and I want you to see this peak this spike down right here. This one right here was a retest, a flip of resistance of the two peaks as support. This is the secondary signal to put your other crap away and go buy this thing, okay? So you had the first signal, it broke it. Second one, and might I add, I won't use small stops on this. I have to be honest. I'll put my stop. If it's breaking out here on this bar, I'll go all the way down like into here. I'm not afraid on this. I won't take full size. And then when it pulled back like this, I would go, all in the sense of, for me, that's a full 1% risk. When I do work on myself, that would probably be a 3% risk. They're way too powerful. But I'm just not built for risk the same way. You guys using my same tools, some of you will make more money than me. It's just a reality. Some of you will have higher percentage returns than I do just because I'm a chicken. That's just the way it is. But this makes me a livelihood, so I'm not complaining. And it makes me the ability to afford every general toy I want within reason. So next thing, NRG, same pattern. Left, right, the two sides of that double bottom. It's an M. Look how deep the retracement is. Look at the nice two slides and the second one deep down, and then it comes back here and retests, and the sucker just takes off. This was like this is like yeah, this is an enormous move. I forget what the percentage is on this. It's enormous, enormous. This was a cheapie. I forget what the pricing on this stock was. Oh yes, I told you just yesterday or just a little earlier in this call that I screwed up on ERJ, and it gapped over the day. If you look at this bar right there, closed toward the highs. The next day it gapped right over the top, and I'm like, ooh, this is a gap flip. Let's look at it. And I bought this thing or something, I think, in here, and then it shot up, and I sold it, and I'm like, because somebody in my class actually told me, hey, ding dong, you missed the TRL or the top of the channel line. And I went and looked again, and I went, oh my God, copy the uptrend line, copy it to the top of the first peak, and you got the channel. Holy crap, get me out. And somebody gave me some crap. I think it was K-Dub in chat said, I'm going long. Why are you always fading my decisions? And I'm like, no, you don't get it. There's something wrong here. I'm not going to explain it, but that's a signal right there for me to stay away. And the stock proceeded to, reject and pull back and the rest, and I avoided this thing since. But, and I only need 2 pivots to make an uptrend line, and I only need 2 pivots plus 1 top pivot to predict the future. Remember, you saw that in the videos. 3 points equal the 4th point generally. We don't want to get too complex, but even sometimes 2 points is enough to predict the whole future. And that's too complex. But, that's the kind of stuff I can see from looking at it. I did use the previous pivot. 1, 2 here. Then I used that. Even if you use this one right here, it wouldn't have mattered. It would have just had a slight push over it. It's the same information. It would have been, this is overbought or extended or not somewhere you want to be playing the game as easily. So you knew you were at the upper end of the pattern, and it was time to, watch yourself. Next one, BABA. Perfect example is when people say to me, how do you get in these? It gapped past the first trend line down here. Well, it gapped over a trend line. So if you have your lines drawn like this perfect from the top downtrend line, and yeah, price, you have lower ones, but I had this in my system probably for months. What am I saying? This was probably in my system for 4 months. And, it sits there, and all of a sudden I get an alert. Boom, it gapped over. Look for an intraday signal right here, and you get in a trade. And so that's how I get some of my best trades, is off big alerts where I'm not rushing to figure out what to do today. EMES, everybody was talking how strong the stock was. Pretty easy how I saw it. You had a TRL. It actually came up to it. It actually surpassed it, and it sat on top of the line. And this is why you need bars often over candles, is the clarity of this edge is you cannot see it even in this picture. But literally, they spent 2 days right there, then a third day right there, of telling you they see this line. It's right there. We don't count 1 bar or 2 bars by accident. The third one, you're like, they see this thing. That's actually an inverse head and shoulders if you didn't realize it. 2 on the left are 2 lows. There's a spike down, then it came back up inside above the pattern, and then it made a higher low at around the same level as the ones on the left. That was an inverse head and shoulders right on a TRL flip. So you can nail things like this if you know what to look for. Next one. Fake up, same one as I showed you on Momo. There's 2 signals that help you to know when you're in trouble. In this one, I actually was long this CINA. I want to say into here. I forget when I don't remember. I apologize. Downtrend line, it broke out. I thought I had something here. I actually caught it in here, and it ran up, and I'm like, oh, I'm doing good. And I took a first scale 5 to 1, and then I realized, holy geez, I got a TRL up here. And it broke back under the TRL, and I started selling, and then it swooned down. And I actually lost some money right here. But when you see it break over a trend line and then fall back, you have to be thinking that was a fake up. It couldn't succeed. It excited people, but there was no follow through. And so when you see that, that's one of the tools you have. This is the octane of why this went down and fell like a stone. It just, boom, slice. Why? because big bars or big moves, unless they're from news, come from people getting effed. I'm not going to swear. So when you screw people, when you rip people's heart outs, when you disappoint them, when you throw them off a ledge, that's when you get big bars. Now, unless it's news. Here's the ACIA trade. I mean, it was fairly easy. I mean, you know, BSL, wait for it, came and tapped it, kind of tapped it again, right shoulder style, as I keep showing you these retaps. And then it went straight for a couple, 3 days, tight as can be. And I forget my cost. In doing that, I end up going and having those little tight days, and I went long. And you guys remember, I scaled into this. We hit resistance. There's a little TRL right here. 1, 2, 3, 4. That's what you don't see with your candles. 1, 2, 3 there, and it poked up to right there basically. And I saw that, and I saw a double top, which is a 2T, 1, 2, slightly higher here, so 2T, and a TRL, and said, I'm going to dump everything but the last 10% in calls. And those 10% in calls, I lost, 40% of the value in one night, but I didn't care. I made enough from here to here and a very good exit. So you're even seeing me use layers. 2T, TRL, overshoot, which is overbought, breaks the rising little tiny triangle as well. I mean, I have all the proof in the world to show you why we can read enough to get in these things. Now, some of you ask, well, why don't you enter exactly on that tap? Well, because that's not enough layer. Meaning just because it tapped right there is not your excuse. You have to be able to then find things afterwards around that area that would also identify that as being a trade. Baidu, we already went over. I don't know why I have 2 of those. So let's see. TNA, this just recently happened 2 days ago, I think. I even said the Russell looked a lot better, and I don't try to, get too far into everything because I would have to explain it over over 500 characters, but, breaks an uptrend line, comes underneath it, makes a 2B pattern, and gaps from the prior day back over the uptrend line. Over, like within ticks. Ta-da, long signal, market long signal. I get long that kind of stuff. And no, if you see how fast the stuff I'm talking about is, some of this I can't call live. That's why when sometimes you guys ask me and I say, well, I'm sorry I didn't mention that one, or it wasn't live call quality. The real truth is it can't be done at live call speed. I would have to be on voice, literally talking through what's happening. And actually, I'm doing that with the current people on my feed next week on Wednesday, I think. But I'll do it again for other people, which is I'm live sitting on microphone and the rest and walking through everything going on so that they can get an idea and record it and, hear and see all of this stuff doing, at the same time. So, I can't answer all those right now. I'm sorry, but let me go on with this. And then if you have other questions additionally, we'll move them on to the second class and do that. But I got to focus here or else it's already been almost 2 hours. And I know people want to have a weekend still too. So I don't want to tire everybody out. But, we could go back and look at alternatives, why I call things. But if you start looking at what I'm saying in these things, you understand how I find quickly a bunch of layers that build up. Here's an example of what I mean by flipping, or some people would call this a base back test. This is how nailed this thing, I believe, is exactly here. He saw the pattern we discussed, and it was a resistance point, if I remember correctly. It pulled back, he saw it, he bought it, and I think he made a 50% return on this thing or more. He was scaling out this week, I believe, some of it. He still has a runner. So, the people in class or the people who have, the effort and putting in this, they get a result. In fact, he said something, and he said it in chat too. He said, my biggest month in a year was done trading one of Randy's patterns, and that was a right shoulder failure. He literally was just scanning every day and just looking for a right shoulder failure. And when he found one, he would just take it to the head. And that was his entire trading plan for those. And he had great returns. And the only reason I don't do that is to do well at sitting still and doing one thing. I have to be doing 20 things at once. If somebody held a gun to my head and said, you're allowed to do only 2 things and, you're going to do them every day, day in and out, I'm sure my performance would actually be better. But, I'm not built that way. Again, we all have our demons. Next one, NRG, same example here. There was a triple top here. You have major resistance, flips, major support. And some of the guys caught this one in December after the class and nailed this. They got a first signal as a double bottom on prior resistance as support, and then a downtrend line break right here of that little tiny mini descending area here, and 12.25 to 17 whatever, you're doing pretty good. These are let's say it this way, you're beating the crap out of the indexes. And let me tell you guys, I know you have these huge expectations. Those of you that are more rookie-ish and don't know how the markets work, all that's expected to do in most cases is, you're doing, what the index does. If you're doing, 8-10% a year, you're a genius. With small money, meaning without having to deal with the problems of hedge fund money, billions and hundreds of millions, the fact is you can move around returns that are 10 times that. It's just 20, 40 times. What am I saying? It depends on how controlled you are, disciplined. If I had Dan's level of discipline, I can tell you right now, I could print millions and millions and millions and millions and millions of dollars out of the market. I could do that monthly. I could produce just outrageous returns. But I have my own discipline problems. Again, somebody who is ADHD or like hyperactive and has a problem focusing on something isn't going to be the best at, sitting down and just perfecting one trade. I'm going to be good at jumping around and doing 12 things. So you have to know what your strengths and weaknesses are. I know that, some of these things in the right hands. And in fact, I know some of this went in the right hands, which is the danger too. A lot of the charts from the guys from this class have come from Bloomberg systems. I can assure you, if you're spending $2,200 a month for a trading platform and not using Thinkorswim, I can assure you, you're not a retail guy or girl. If you're using a trading platform that costs $25,000 a year per head, something is, you're working for some huge money. And so the end result is that's a lot of people from class have sent me from Bloomberg. And I have begged them, to obviously keep this secret, and they signed an NDA not to share it with their firm and the rest. Here was the Apple trade. I just want to show you how, simple things are, and also how I screw up. Here's a head and shoulders, very simple. You can see the neckline. You can see the projection to the exact right shoulder. I saw this way in advance. I called this, weeks before it, like 2 weeks before it actually happened. And I even put it on Dan's Twitter as his call, because I do that. And then, called 112.50 and is when I bought it. And, you can see I was good here. This little minor pullback is above the right shoulder, nothing to worry about. When we take a right shoulder, we generally take the head, which is the most common thing that happens. A lot of them fail after the head, like CHK did. But this one went up, and it actually went over the TRL. Right about here, I had been scaling out. And it then sat there for a couple of days, and earnings was coming up. And this dummy, meaning me, I shouldn't say that, this mistake I made, trying to be a little easier on myself, was I sold the stock in full here. Now, my rules say I'm supposed to leave a runner, and if I had left that runner, the stock is a free ride from 120 where I sold it to 140, and it's still going. So I could have left just a few options behind, and this is free money. This is not a technical problem at all. This is a psychological problem. And that's my risk-adverse nature. Next one, noticing and seeing flip behavior. Here's a topping resistance line, 1, 2, 3 flips here. You can see it didn't take off. It came back under, and now it's struggling in this region. So you can sometimes not get the results that you want from pattern. You just have to, you just have to read the pattern. That's the answer, is reading. The answer isn't predicting, it's reading. And so while some things can be simple, and some things are hard because you have to take the time to accept whatever the chart shows. If you don't take the time to draw the chart in advance, it's harder to see all this. But here's the thing, is all of these are static images. I'm not putting you under the pressure of having to realize that this flips, this is flipping here. That's a 2-bottom flip. I'm not putting you under pressure on an undercut here and something's going wrong here. There's a downtrend line and it can't exceed. There's all kinds of things that take time to absorb. So it's easy because this isn't moving, and it's easy because this is static, and it's easy because it's pre-drawn. It will take you time practicing to see these. Next one, remember I showed you the gap flip on X? Well, it was also a downtrend line gap over. So, you know, there was a really good reason why I was looking at it for a long. Here's something I talked to you about, which is a huge base. And I said this in chat, and I'm sure, you know, people get lost in all the noise. They don't pay attention. And then they ask me for a trade, and then I like want to laugh. This is a huge base. The larger the base, they're going to hit generally 20% moves. So in the case of Dow, I gave the signal at $54. The stock is now trading at $64 almost, or around $64. This was cut before. And it was relatively easy trade. They're not all easy, but it was easy. And right now we have one I'm looking at right now, and I'll give this away free. You're not on my feed, but I will say that I have been looking at doing the same idea, and that is this stock, DOX, DOX. And you'll see there's a weekly base going back from 2015. Let's see, this is 7 of 2015. This has been the top of this base, and there's a flagging up at the top of the base. So, you know, I will look for huge bases. There is no computer program. There is no toys or whiz-wazzes. I simply see a lot of charts, and then I find, and also I have the benefit. The guys in the class that understand what I look for are good enough to be as part of it. I wouldn't do the feed to be paid $99 to sit and talk per person on a feed. I need the feedback as they're throwing out ideas. If they're understanding what I'm doing, then they're going to throw out ideas that will provide trades for me. And so there's a purpose, you know, a selfish purpose that I, you know, needed out of that as well. This was your first trade when you joined the room. Okay, well, that was the easiest trade ever just by virtue of base. Not a very hard technical thing, but, you know, a setup on its own, huge bases. So, you know, this one was not complex. I found a couple of layers for an entry, but that's just an enormous base, and it's just a whole different animal. You know, you treat huge bases like enormous breakouts. They're powerful because there's so much time of compression then that they often are moves. And it doesn't matter. I've done this on Walmart. I've done this on stocks that are garbage, and they still move. Here's why Chem, everybody's jumping around on Chem, why it had such a big move. It was a TRL gap over, same as I showed you on others. Parabolic moves over a TRL gap or over a TRL that flips. So Chem is that exact same instance that you saw before. Here is NMM. This trade was both done by fibs. In fact, there were two trades on this. The first one was also a fib. I didn't draw it, but this was a downtrend line break, higher low retest of the downtrend line backing. There's actually two bars that almost match perfectly there. So that was actually a double bottom on it, but I see all these things you can't see yet. You will later. And so I started in this stock at 156. And then it came up and I drew my fib and it pulled back right exactly to the 61.8 area. And it did a key reversal. Here's a bar that closes low and reverses the whole bar the next day and closes high. So I realized that it was acting properly. I didn't buy here because I'm not first mouse and didn't figure that out. It kind of acted great in here and did an outside bar reversal right here. You can see 2 days, 1, 2 sideways little bars tight. Went underneath it, scared the crap out of every little, you know, little chicken little in the chat room. And the next day, and the next moment later on in the day or whatever, it ripped past the high of that bar. And so I just went in the 180s and started loading in more. And in turn, the stock then got up here, and you can't see it. There's a TRL 1, 2, 3 right up here. And I scaled some into that peak, and I actually called it live in chat and said, guys, I'm cutting back my NMM, and I hope you saw this. And I repeat it like 6 times because there's always some person, and I'm not trying to be mean, some idiot that goes, well, you don't call your trade. Yeah, I do. I called it and said I exited, you know, a portion of my position, and the next day it gapped down on the call of a secondary. Can't do anything about that. A secondary is a gap down, but my remaining shares got gapped down. Such is life. My cost on this trade is probably in the 170s. I averaged up too many shares in the 180s, and raised that cost pretty high, more than I wanted to. It may be 180's average cost now. I have to go look. But either way, you know, super percentage return. You can do a lot of shares when you have something like this. And the end result is, you know, you understand it's, again, layers. Pulls back using a fib, you find other tools. In this case, outside bar reversal. I had other stuff at the time. Heck, there's an uptrend line that was right after here. There's always some behavior you can stack up to figure out, but you don't want to force things. I saw some people sending me charts and I wanted to laugh. They were like forcing the line over to make it work, or forcing the downtrend line to get it closer. No, it either works or it doesn't. Don't try to make up stuff. You either see it or you don't. If you don't see it right away, or if it's something that's not clear, don't use it. But another thing is, don't take your line so quickly off your charts. You will notice a line that sits there, and days later the alert will go off, or you'll see it and you'll go, oh my God, they did it. They retested it and tapped it exactly, and that was the low. And this happens everywhere. You know, everybody freaks out when a TSRO crashes down in one day after news. It was exactly to the 61.8 fib ratio. Exactly. It was like to the tick. Thing hit it and boing. The market's more technical than people understand. Here's ANET. Somebody sent me this chart, so wanted to say, what's the difference here? Well, the third time it hit the TRL, it sold that time. The next time it gapped over on an enormous monster gap. Remember from the class, monster gaps are powerful in the direction of the gap. In this case, this stock is a candidate for strength going forward. Whenever you have a big gap in one direction, it's a candidate on your other scans and ideas to look for something, because the big gap says somebody got it wrong. And the big gap says there's maybe a lot more juice in this tank. So notice that and stay in the direction of the trend and try to find something. In this case, you had the absolute low if you actually saw and had your alert set. I did not have it on this one. That's the end of my charts. I'll now go to questions, but we're finishing up here. It's exactly 2 hours, but I'll try to answer a few quick questions, and then we're going to finish for now. And this is not over. You're going to get another couple of Q&As so that we can answer questions. But I have to admit, for most here, the questions that I'm getting on email, and this is no knock, but they often come down to, you need to draw more. You don't need to see my drawings to figure out that if you start drawing, the chart will speak to you. You won't even have to try. You will actually sit there and go, oh my God, this chart speaks to me. I can see it reacting here. I don't need him to tell me. I see price responding. It's very important that you understand that I'm not the one who found these things by virtue of I invented them. The market told me they were there, and people trained me to see them. And once you start to see them, I had to draw it 1,000 times until I finally said, I can see this without even drawing it. I can see this stuff without the desire to have to draw it up. No, I'm not going to go. Let me go now through the list. No, I'm not going to go over the M again. You can watch the replay. How long am I keeping the videos up? Probably 3 months or so, 4 months. It'll be plenty of time. I'll probably give you more time. I'll probably keep it up till July or August, and then even then I may have a way for you to keep viewing. For those people, most people are too lazy to even view it 4 or 5 times. So let's be honest. The people who want to stick around and do the actual homework, they'll be fine. Jared said 12 times the same thing. A lot of this just seems to be simply connecting the dots, no fancy indicators balancing. Yes, some of this is incredible. That's what simplicity is, what breeds the use of this. You want complex. That's not how you make money. You find the simple things the market provides on a day-to-day basis that are not rare, although the M bottom is rare, but that are not rare, and you stack them together as the odds grow in your favor that a trade will work. What layers? It depends on the trade. I don't know what layers I'm going to use. When I look at it, I can see, oh, there's a pattern. Oh, there's a trend line. Oh, there's volume. Oh, there's a fib. Oh, there's a bar pattern, a screw bar or a gap flip or whatever it is. All the things stacked together, and I get a trade idea. If I do it based on one thing, on a gap flip, it's because I saw the screw bar or gap so perfectly, and to the left there's nothing major, and I just go, screw it. There's one I had today I was going to go take, and it didn't act right, so I didn't take it. I was all ready to go on to TIF. It gapped pretty much almost exactly where it needed to gap. And I sat there and I'm looking at TIF and I'm going, nobody's buying it up. If it was right, this thing should be like getting hot. You know, if they gap this to the right place, there should be buyers scooping it. And there was nobody there. And guess what? Nobody showed up and the thing started to fall down. And if you had taken the advice of C. Kip, who gave me that advice and said, Randy, this is the one time I want you to go to the 5-minute, which he's a friend and he was right. If you looked at a 5-minute, you would see no opening range breakout. Forget the idea, which is I passed on it anyways because I can read price and I can get a feeling of the attitude of the market just by the price, the way the bar moves and the rest. That's just a skill you'll learn over time. But yeah, I passed it. I mean, it was just that simple. But you could have known that if you were looking at one. So can you give your definition of a high type flag? I don't care about O'Neill's definition. I'm sorry, but a lot of people read those books and get so close to those. And the problem with it is he advertised it to everyone. There's everyone in the world had the right to read his material. So the value of it is they make the fuzzy logic makes it more difficult. But anything that moves within a few 3 months, 4 months, that moves up 75, 60, 80, 100%, all of those stocks. I do have a scan that I use in TC2000, which just says anything up, I think over the last 4 or 5 months, up over 40 or 50%, let me look at it. And, you know, I still look at, you know, over 200,000 shares a day and, you know, over $5 or whatever it is, or maybe I don't have that on that one. I have to go look. But I literally would just sit and walk through those charts once a week and just go, you know, anything going on in any of these. And that's how I'll run into a Fred's, F-R-E-D, Fred, F-R-E-D. And while that was a huge winner, it still actually hasn't fully failed yet, but it could. But I'll do that. That's how I find a lot of stocks. X, Fred, they all come on to the formula often from something that's been incredibly strong or strength in the same sector I'll sometimes find. Let's see, can you address the high? Okay, I did. I've seen the videos 8 times. Well, now that's unusual. So I give you credit. The good news is you did it 8 times. Now go draw everything you saw and take charts and draw them up until your hands hurt, until your mouse finger, has a problem, and just keep drawing and drawing until your eyes start to see, oh my God, I can see those 3 bars are already a mini TRL on a lower time frame. You will literally be sitting on an hourly chart, see 3 little bars where they stack in just a certain little edge, and you'll go, I know what that is on a shorter time frame. I can tell. Or you'll see 2 bars that tap the same low on an hourly, and you'll go, I know exactly that's a double bottom on a lower time frame. I can see it. The skills increase with practice. Can you talk a little bit about the entry on a 5-minute chart? What do you see? On a 5-minute chart, I'm not a 5-minute trader. I think I've gone down to the 5-minute maybe twice in the last year, maybe. I never want to look at it because I'm too impulsive. I'll start pressing buttons. But what he had suggested, which is smart, is if it's a gap flip, only if it's a gap flip on gappers where it's a screw bar or a gap flip, in order to enter rather than just hitting market, you go down to a 5-minute chart and you look for an opening range breakout, meaning you let it create the first bar range for 5 minutes, and then the second bar, if it breaks the top of that, you buy and put a stop underneath the low of that opening bar. And you try to catch the range with a little more control. And that's the way to do it. On our gappers, you don't have any way of identifying tight to the open. You can simply identify that a stock is opening and it looks like it's opening, but you often will miss them and have to scan after the market opens. Remember, sometimes they'll look like they're gapping in the wrong place, and then 1 second before the market is ready to take off, they'll turn the computer on that pushes the price exactly to the spot. So it's hard. That's why you guys see me sometimes disappear the first 3 minutes of the market. I'm like flipping around looking to see if anything's like perfect. I may have them on my list already, but I'm like literally scouring for which one's the right ones. And sometimes I won't take them at all. If the market's not good and I don't want to take gaps, I'll sometimes skip it. And if the market's just turning down, I may look for them on the other direction, gapping down underneath the prior day's low, or a strong bar and the next day getting wiped out in one open. Those I'll do the other direction. when using a 5, do you draw the lines with, I don't do any lines on a 5-minute chart because I don't really use a 5-minute chart. But if I went down to the 5-minute chart, it would carry with me on TC2000 what I drew from higher. What are we looking for in volume? I only use volume for breakouts or to look at the difference between one pullback wave comparative to what it moved up on. So if a stock moves up, let's say on ANET on huge volume, and then this is a light volume pullback here, I like that. If this is pulling back on huge volume and it's falling down here and retracing and stuff, I know it's not as strong. But I have to admit, volume is price is the first 12 and volume is the next 4. You know, its volume is so much less important than price. Now, I will tell you where volume is very important, and that is where Dan's setups come and the market starts to be in breakout mode. The only way to identify if there's enough buyers to break the rubber band at resistance is that they show up in volume. So the time that I am looking for volume is when it breaks a major line of resistance. This gap here did not break a major line of resistance. It gapped over with it. So that didn't count. Down here on ANET, that took volume here. I would have been looking at volume out of this consolidation. I would have been looking at volume right here because that's leaving a breakout of a base. Or in this case, it may not have been a base. I don't know, is this 20% up? No, this isn't. I don't know. But this tight area, I would have been looking for volume here matters. In this case, this thing gapped over resistance. There's no volume necessary for gapping over resistance. There was no breakout against people. Professional money got it wrong and gapped it over the area of trouble. So they flipped it on open. So I don't really worry about that. So volume has its place, but it's usually breakouts. That's why there was somebody in chat today. I was like ready to tear my hair up using no charts and like, you know, said to me, why is a breakout today? The last 2 days were like a huge key reversal. The stock got rejected on earnings or something, and the stock is pulled back. There is no breakout. If it was breaking out, it had to get past a bunch of traders. All it did was pull back and then snap back and retrace into partial of the bar. It may have snapped back to only 61.8% of the fall. Who knows? But the end result is I wouldn't need volume to determine if the stock is now totally fine until it gets up to the resistance that was the absolute hot stove that shot it down. If that little spot where that little girl went over to it and tapped it and burned her hand so bad that she ran away 4 points or whatever it is, goes back up there and puts her finger on it again, and this time can rest it there for hours, and it doesn't bother it, it probably doesn't matter so much anymore. But last time it was up there, it was a blowtorch. So we'll worry about that at that time. But breakouts require you to get past some major resistance. That is kind of the benefit of some of these gap flips and things like that. Simple lines create some unbelievable trades. Understanding the psychology of why an M bottom works is even more powerful. Understanding the psychology of a right shoulder failure, of how the people are trapped in the pattern, and that people usually use the pattern for the pattern, not the pattern failure. Those are the kinds of things that take a little bit of thinking, but you start to get the chess game going. Understanding why it matters to do screw bars. I mean, you have to think in terms of using your head and say to yourself, well, the prior day on Bud, it gapped down on earnings and closed near the low. That means anybody who is afraid its weak hands probably have already sold or have been selling, and shorts are really comfortable. And anybody who didn't like it, that shorted the intraday, that left a runner, they're all in their they're comfy and snuggy in bed. And the next day it opens up literally one tick over the high of the previous day, and it's like, what did it say to all of them? It said, guess what? Wake up, buddy, you're screwed. And next thing you know, they're backtracking the whole day. And that's how it works. Last one here, I'm going to answer one last question. So I said how to join the feed as the first thing we discussed in this presentation for Q&A. And the answer was, there is no Twitter. It's been taken down. I replaced it with Slack because it's more secure and because people can search and learn more quicker. So for learning management, it's better than Twitter. And so I will invite people after I start to see that people are understanding. What I can't do that would be unfair to the other people that have been able to come in and out of that room is, I should say, into that group, is that I can't have somebody come in who's still wondering basic things and understanding, that's asking questions that the group is way above their level. It wouldn't make sense for them, and it wouldn't make sense for me. I'd rather clear up all these issues of understanding what we're talking about here, and through Q&A and through emails that I get for Q&A, than trying to solve that sitting in front of a room of people who are picking unbelievable trades, and we're having to stop to kind of discuss some basic. It wouldn't be a great connection, and it wouldn't be fair to them. And you know, a lot of people don't need the feed. I've told that. I have some people ask me, do I need the feed? The answer is you don't need the feed. But if one trade pays for the whole feed for you, like I have some rookies in there that are just killing it. They cannot believe how well they're doing. I just got a letter from one of them that said to me, he did like 10% in a week this week, like not a good, easy week, like this week, did like 10%. And he's like, I can't believe this. I finally have some control over this. It's working. Those kind of letters. I got another one right before the class. Those people who are having those kinds of results, you know, it's worth it for them to be there. They needed the extra help and support of somebody putting them through absolute examples, looking at their chart and saying, nah, you're overutilizing it here. You're pushing it here. You know, that's how it works. If you work on your own, you don't need it. It's not something you need. How do you utilize? Okay, one more thing. Why does Dan recommend 5? Because Dan likes those time frames. Two traders are exactly the same. You'll pick out the parts that you like. He's able to. He doesn't have your discipline or my discipline problem. Are you comfortable watching $2 million, you know, disappear in your account in a day? Are you comfortable sitting for 3 months without taking any trade? I don't know. I wasn't. I couldn't do it. I'm not that controlled. Well, then he can handle any time frame because Dan is a different animal than me. I couldn't sit there and be tempted by every little tiny bull flag in a 15-minute chart and lose any more money than I had already lost. There wasn't any more to lose at that point. That was in 2008 when I blew up. How do you utilize training if we work a full-time job? You don't utilize training. You watch it on the after hours, you read it, you learn the process, and then you use it in practice in the real world. I mean, most of this comes down to, you didn't pay me to inject this stuff, and you're going to have to put in massive amounts of effort to be one of the successful ones. I mean, let's be honest. If I take 300, I have probably 300 students in this class, and I'm done. And out of those 300, I'll bet you only, and this is a terrible thing to say, but 50 people will, not even that, maybe 50, because it was enough money maybe that some of them will actually listen, but maybe 50 of them will really put in the effort and, you know, really do it and really apply. And they won't change their trading plan because of 3 losses in a row. They'll actually lose 2, 3, 4 trades in a row and just stick and tweak. This is the last thing I have to say before you go. This is the part I forgot and I couldn't do till the end. And this is recorded, so it's very important that everybody hears this. After you've done learning this, I gave you a nuclear bomb. You can blow it up on yourself if you don't understand. Your job is not to do everything I do. It is not to be the trader that I am. You're going to sit down, learn all of this material and say, I'm going to slap together this support with these trend lines, with a fib retrace and my stochastics, and that's my signal for pullback buys. That's my one tool for pullbacks. I'm done. That's my pullback tool. I've said it, it's done. One of my class members said, all I'm doing is high tight flags. I'm looking for them as one of my main longs, and I'm going to scan and wait for them until I find them, and then I'm buying those on the bottom of the bull flag, whatever it is, and that's in my plan. 4 layers, done. And I said, done. Put it aside. That's in your plan. You're going to trade that. And the only thing I said after that was, you're not allowed to change it if you have 4 losses. And he said, well, what do you mean? I said, no. You're going to get 4, 5, 6, 7, 10 losses, whatever it is in that process, or 10 trades buying, and the math is going to help you be okay. But when you finally have enough samples, you're going to look at it and go back and say, I can tweak this one little thing here, and let's see if it improves. You're not going to change 2 things at one time, or you'll never figure out what went wrong. Trading is not about inventing new every day. It's mastering what you already know and getting better at it. So you do 10 of them and you look back, just like Douglas's book says, make a slight tweak. Okay, I'm only going to take the ones where it's also got a double bottom. Okay, that's the rule. I've realized that's the slight adjustment. And suddenly you do that and you see, oh, I'm right 6 out of 10 times and the average is 11R. I'm good. Perfect trading plan. We're done. Let's find another setup that's just for shorting. Let's find a setup just for breakout. And you literally duplicate until you have those parts. But your job is not to go and learn all this, to use all this. It was to read the market, price action, read the tape. Now you go back and pick your setups. Also, you also that are nice enough to help the group. Send me over your favorite setups as you test them. Don't do one with 3 layers and some rush trade that you got 3 trades and you get 3 in a row and you go, oh my God, I'm so excited, it's working. When you get 10, 15 samples, come to me and do a favor to your classmates and say, I found this one setup and it's working fantastic. And one of the guys in my current on Slack here, I don't know if I can show it, but one of my guys on Slack presented a trade, and I forget what it was, but it was, I'm trying to see here. Let me see. I can't remember where it is, but presented a trade which was a style that when put together absolutely equaled a reliable, consistent way of making money, and had tested it and was using stochastics with a mixture of support and resistance and pattern, and literally said, I'm doing fantastic, and shared it with the rest of the group, and those that wanted to use it then applied it. That ends my one more last question. What email do we use to send them at? Just use Randy at chartpattern.com or Randy at zengertradingu.com. Reply to one of my emails. That'll do it. But have a great weekend, guys. I enjoy doing it. I wish I could make everybody in the world profitable. It's just my nature. But I hope you'll really do the work to make the difference. And I hope you have a great weekend, guys.